Morning traders, it's Friday and we'll look at the Dax Technical Analysis for ROM yesterday and today, and jumping straight into the chart, 60-minute chart. I've got a volume profile on the right hand side that's taken into account this data that you can see on your screen at the moment, and you'll notice that if we are going to get a bullish bounce from yesterday's low, then the most likely target that I'm thinking of looking at would be this high volume node or high volume area inside the value area, which you'll notice is still inside of these tram lines, which is, if you like, our technical range at the moment, although yesterday we did put a mockery to that by breaking through it. So another part of me is wondering whether or not we're starting to see some kind of pivot formation here, and whether that is the start of a move. Maybe more of a larger corrective bounce, but there are a number of different resistance levels, zones, factors that might slow progress down. The first one is this downsloper you can see here, downsloping high to high trend line. It was pierced initially over here by around about the same amount that our range was pierced yesterday. So that's the first level of resistance that may well be of interest. If we break through that, there's a low volume area here that you can see price just cutting through quite quickly, and getting up towards this higher volume node may not be completely unlikely. There is a little bit of fundamental news out there to do with trade tensions and there being a bit of a relaxation. It's just typical Donald Trump manipulating the market like he does. So if we take a look a little bit deeper into that, maybe we'll just go and have a look at the TPO from yesterday. There's not a lot of information that I think I'm going to be able to get from this yesterday. We're just splitting the TPO down into the individual 30-minute candles. The M print was interesting. We're actually in the M print right now. It was quite a large single print. So that's an area of potential resistance right there. And the value area was consolidating mainly in the second half of the session. We are actually above that at the moment, and we're just kind of compressing into a sort of 60-70 point range, and I'd likely see a breakout fairly soon today, but not a huge amount of information to really take from that. But on the volume profile, these are the levels that could be of interest. So you can see this B-shaped profile over here. And as for yesterday's price action, the profile that we saw, there was not a lot of volume traded, despite the fact that we did see one of the lowest levels we've seen for the last 5 or 6 months on the DAX. Still wasn't a huge amount of volume traded. But we're into this zone. You can see that spike, that candle there that we just looked at on the previous TPO with that single print. And we're in that zone right now. Above the value area from yesterday. We've used the point of control already as a springboard for this move this morning, and that's an outside bar on the hourly chart, which you can see over here. Look at that, it's a lower low than the previous candle and a higher high than the previous candle, so it's an outside bar. That generally tends to be an interesting one to look out for breakout moves. So we'll see whether it manages to do that. I'm going to watch the IB for the clues this morning, and the strategy as well. Starting to expand that IB as we speak. We've got another half an hour or so. So we'll see what we're working with there. And the strategy from yesterday, let's just talk you through these again. So the first one here would have been an opportunity to get long, just over 8 o'clock. And this example would have used a stop loss here by this line. Alright, you would have put an entry in at the open of this candle, because as soon as the first candle closes, that's your entry to get in. So it would have been on the entry of the open of that candle. That was about 35 point stop loss, and you'd aim for 4 to 1, so that's 140 points into profit. And in this particular example, you would have been stopped out. You would have ignored these two because you already had a trade open. So it would have just been that one, and to give you an idea of how that would look, it would be something like that, but it's way up above, which we can't quite see. The second one was a short. Notice how we've changed from a green background to a red background. So that suggests looks for short trades now. So you don't take short trades when it's green. You don't take long trades when it's red. I mean, you can, but I don't. And so you're looking for shorts. This was the one here. 505 would have been the stop loss. That was where the dot was. And you'll notice that we were stopped out on this candle here. So that's 2 bullets. You would have ignored this trade because you were already in one. And it got stopped out on the next candle. So 2 bullets, 2 losers. So your third attempt would have been this one. Stop loss would have been up here. Can't quite see what the level is, but it's about 517, something like that. And you would be looking for 4 to 1. Open of this candle. And can't quite see where the 4 is because it's way down here. Somewhere down there. You get the idea. My mouse is not quite settling on the 4. And you're straight into a deviation candle here, which means that your close is underneath the deviation low, which is 2 standard deviations underneath VWAP, which is the volume weighted average price. So if you close above these dots, you probably want to get out of that trade. There's another sell signal here. You would already be in one, so you wouldn't take that one unless you're really aggressive and you want to double up on your trades, which is down to you. It's your money. And there you go. So you'd have hit your target. 122 points. Happy days. Everyone is able to see the same levels. If you would have stayed in the trade, then you'd have probably got out here anyway, because price closed above these dots, and you can see the dots started to form underneath. And you might wonder why we didn't get another sell signal here, and that's because the candle didn't turn blue. It would have turned yellow, and it's too stretched. Like that one there, for example, there's blue. Or actually, I wonder if it was because of a break. Yeah, it might well be. Let's just remove that. And remove that. There we go. So that actually was there. Okay, but you would have not taken it because the sell signal landed on a yellow. So it's already below the deviation low. Probably not going to be looking to open a new trade in those situations. And you probably would walk away at that point. You'd be done. But if you continue to trade, there were a few more buy signals over here. Looks like they would have been stopped out. They were. And then another buy signal here. Probably would have been stopped out, and that would have been you done for the day anyway. But once you've hit your target, walk away, you're done. Look for another market, or just walk away. Right guys, so for today it's already looking like it's in a bearish bias. It's possibly going to change to bullish. We are in this bounce, this rally that I talked about just a moment ago. We've got the deviation warning candles on this side here, so we're above the deviation high in the morning, but for now I'm probably going to ignore this strategy for the first hour or so of the day and look for the IB, the initial balance strategy, and see what comes out in the next sort of half an hour or so. Right, that is me done for today. I hope you have a good trading week. I hope you had a good trading week, and I hope you enjoy your weekend, and I'll see you again on Monday. Take care.